All right, I think we can get started. Thank you everyone for attending this ADU financing webinar. My name is Chloe Gross. I'm a planner at Southwest Region Planning Commission, and we are hosting this webinar tonight. A few housekeeping things before we get started. Please keep your microphone off. That just helps with everything, keep the flow smooth. Please save your questions for the end of the session. We have designated time for audience Q&A, so we will get there. When we get to that time, please put all of your questions into the chat. That will allow our moderator to just scroll right through and see all of your questions really easily. Please note that this session is being recorded, and the recording, the slides, contact information, and any additional materials will be made available on the Southwest Region Planning Commission website at www.swrpc.org/ADU. So now that we are done with housekeeping, let's go through our agenda for tonight. We'll do a quick round of welcome and introductions. I will give a little bit of context about ADUs in the Monadnock region. New Hampshire Housing will give a presentation about cost and financing considerations for your ADU, and then we will have a few guest presentations, our panel discussion, and finally some audience Q&A. So we have a great slate of speakers tonight. As I call on you all, please introduce yourself, who you are, what you do, and where you're from. So we can start off with Ryan.
Hi, everybody. I'm Ryan Pope. I work at New Hampshire Housing. I'm in the Multifamily Development and Finance Division. But today I'm going to be talking about something a little outside my day-to-day wheelhouse, and that is ADU financing, which is something that is a particular passion project of mine from when I was a planner in the city of Dover. So happy to be here, happy to share kind of our learnings there around ADUs and how they work within municipal settings. And very excited to be joined by a host of other bankers who are as excited about this as I am.
Christine.
Forgot to unmute. I am sorry about that. Hi, Chloe. I am Christine Greenwood Smart, Vice President of the Residential Mortgage Sales Manager for Savings Bank of Walpole. My office is on Marlborough Street in Keene, and we're here and excited to be talking about a new ADU product that we are offering for financing. It's actually an ADU construction loan, and I'll get into more details later about that product, and we're happy to be here with you all.
Great, thank you. Roy?
Good evening, everyone. My name is Roy Graves, and I'm the Senior Construction Loan Specialist with New Hampshire Mutual Bank Corp. My main focus is working with builders and borrowers, reviewing their projects and making sure that we bring everything safely down for a landing. We have recently released new products that include ADUs. These seem to be happening both on new constructions and retrofitting on old renovations. So looking forward to being here and hearing all the topics.
Great, thank you. Kathy?
Hi, I'm Kathy Murray. I'm with Mascoma Bank. I too oversee the sales division for the mortgage team for the bank. Sounds like we're on a roll with ADU new programs, and that's what I'm here to talk about as well. And just as a Tyler Gilday, my colleague from Mascoma Bank, unfortunately isn't able to join us tonight.
All right, thank you. Chris?
Hey, my name is Chris Lee. I'm the president of Backyard ADUs, and we are a full stack modular design build company that cut our teeth with ADUs starting back in early 2020. And today we are doing multifamily modular. We've got over 200 units in our pipeline next year doing 3 and 4-story modular buildings. And we're building an ADU a week right now in Maine and Massachusetts and a few in New Hampshire, with the hopes of getting that up to 2 a week by the end of the year. And our only limitation is available financing and interest rates with the middle market family. So we're eager to see this problem get solved and help do it.
Great, thank you so much. That's really great news to hear. RJ.
Hey folks, my name is RJ Adler, and I am Director of Growth at Wheelpad L3C. We build a small, modular, accessible housing product that can rapidly be connected to any property and help family members or friends that suddenly find themselves with a need for accessibility. If you're nerdy and paying attention, some of our products actually aren't ADUs because they don't have a kitchen, and we're excited that in the next 2 months we're going to be delivering our first model with kitchen. So that's pretty exciting.
Great, thank you so much. All right. So a little bit of a preface before we get into the presentations. It's no secret that the Monadnock region is experiencing a housing crisis. One of the many solutions that are out there is accessory dwelling units, or ADUs, which are small secondary dwellings on the same lot as a principal dwelling, like a single family home. ADUs come in a variety of shapes and sizes, and they typically blend into the existing neighborhood. ADUs empower homeowners to become home creators and foster organic infill development. So more housing where there already is existing buildings. And Buildings ADU is one of the many solutions to ease the housing market. We have had some recent ADU legislation in the state that has laid the groundwork for increased development. So House Bill 577 allows for one ADU attached or detached on every single family zoned property in the state. This went into effect on July 1st in 2025 and really just opens up many more options for ADUs on these kinds of lots. Caveat is individual towns still can have additional requirements, but again, this really just opens up the playing field for a lot of new development. So, and this webinar is a follow-up from the Monadnock Region ADU Design Challenge. We received a lot of feedback during and after the challenge, and cost of building is one of the biggest barriers to implementation for homeowners. We also heard that most of our ADU interested homeowners in the Monadnock region want to build an ADU either for themselves or for family members to age in place. So we thought we would gather some lenders and some builders to bring you a rounded panel. So if you want to learn more about the Monadnock Region ADU Design Challenge, you can visit www.swrpc.org/ADU. Everything is on there. There are great designs that are available free and for the public, and so much more. So with that, I will now hand it over to Ryan.
Thank you, Chloe, and good evening, everyone. As I said before, I'm Ryan Pope. I work at New Hampshire Housing in the multifamily group, but again, today we're going to be kind of dipping into my past life when I was a planner and banker for many, many years, to go over some of the discoveries that we had found in the city, and even statewide about ADUs and things that folks should keep in mind when it comes to cost and financing considerations. And then I'm super excited for when I'm done talking, when we get to turn it over to the people who are doing the work on the ground, actually financing and building these things. So Chloe, if you want to hit the next slide, we can kind of go over a quick agenda here, as far as really broken down into two kind of spots. Cost considerations. Development always really has kind of three phases there. The pre-development, it's when it's a twinkle in your eye, followed by the construction when the work is actually happening, and then when construction's done and people are in there and things that should be considered there, followed by a brief discussion on financing solutions, kind of what we had piloted and come up with a few banks in and around the Seacoast region, before we really turn it over to the banks local to SWRPC's region to talk about what products are available out west. So we can hit next slide now. So cost considerations, the planner in me always likes to start with the municipal considerations. Anytime you're considering doing anything on your property, it's probably always best to start with the municipality. Talk to the planners or the contract planner staff to really understand what the local regulatory environment is. Chloe touched on a few pieces as far as some recent statewide law changes and things along those lines. But again, there is some discretion from community to community as far as how those are implemented. So definitely start with your planning office, with the municipality, and really touch base on what is allowable. And when it comes to ADUs and things along that line, we're talking about attached or detached. That's really whether it's attached to the house or not, whether it's kind of a backyard thing, a side yard thing, or kind of your more traditional in-law apartment. Could be a redevelopment of a basement, could be an attic, or anything along those lines. Having a solid understanding of what the design standards are is always important as well before getting too far along into the design portion of these things. Really helps understand what the dimensions of that can be, what the parking considerations would have to be as well, and then an understanding of the process. So whether that's by right, whether that's by conditional use, special exception, variance, I don't think is so much of an issue these days anymore. And what I mean by that, for those who aren't kind of planners by trade, so by right is something you can do without really requiring additional municipal approval. Conditional use or planning board approval requires kind of a hearing before the planning board to ensure that what you're doing meets the regulations. Special exception is before the zoning board, and then a variance is also before the zoning board as well. So difference, just again for planner speak, a variance is when you do something that is not explicitly allowed in the zoning code. Special exception would be something that is kind of allowed, but still requires a public hearing at the zoning board before it can go forward for planning approval. So just some things to keep in mind within whichever municipality you're in. If this is a track you would like to take, a solution you would like to enact for you, your family, or whoever, just these kinds of conversations to be having. The other thing to just be mindful of is building permits, inspections, those timetables, things along the lines of fees, impact fees, investment fees, all of those other things. Definitely start with the municipality when it comes to making any substantive changes to your home. A good way to just understand what the path forward is going to look like from a regulatory perspective, whether or not you'll need an attorney or anything along those lines, and then understanding what the costs outside of construction are going to be. So we can hit the next slide here. And then we can get into cost considerations, design and site. So as with most things, you want to check with yourself if it's an ADU that's going to be in a basement or an attic. It might not require an architect or an engineer to look at that. But if it's not, then it might be something that you would want to consider as far as architect, engineer, the costs associated with that, whether or not there's going to be any digging, blasting, any of those pieces. Definitely considerations that you want to keep in mind. And then again, whether or not you need an architect or an engineer is really dependent on the scope of the project, how large this unit's going to be, what's permissible, and the municipality that you happen to be in. New Hampshire is made up of many, many, many independent republics who all make their own decisions in and of their own rights with the authority imbued to them by the state of New Hampshire. So from place to place, you're not going to find a lot of parity unless it is explicit to kind of the state statutes that have been passed through. So what do you have to consider when it comes to this site? And for things like that, you'd want to think about, like, do I need a survey? What are the setbacks involved? How do I make sure that I'm meeting those setbacks? Is it far enough from my neighbor's yard or the front yard or any of those other pieces? And then a major consideration is the availability of water, sewer, and or whether your existing well or septic system can handle the additional loads that will come from an additional unit on the property. And again, the overarching theme is that's going to vary from municipality to municipality. Water, sewer is usually preferable when it comes to things like that. It doesn't kind of have many capacity concerns. But if you're in an older house like mine, and you have an older septic system, it's one of those things where you want to check with the municipality before adding that unit. And they may require kind of an additional layer of review and approval before granting it, just to make sure that there's no undue environmental or water impact, and that unit can be served in a way that can support whoever's going to be living in that additional unit as well. So that increased capacity piece is always something that folks should be keeping in mind. And then we can probably pop to the next one. So this is something I like to throw into everything that I do. Cost considerations, lead safety. If you live in a home that was built before 1978, this is something I'd just like to make sure that people are broadly aware of. So there was a law that came into effect at a state level in July of 2024. That law essentially requires that any new unit created within or attached to a pre-1978 structure be certified as lead safe. And what that means is some sort of inspection, and if lead is found, some kind of remediation from a licensed contractor. This does include ADUs if any portion of the ADU falls within the footprint of any pre-1978 structure. It does also apply to newly rented units that might have been owner occupied previously. So a good example that I use is maybe we have, I guess we'll use my parents' example. We had my grandmother who lived in, it was a granny flat. We didn't call them ADUs at the time, but a granny flat attached to the house. It was a pre-1978 structure, but it was in the 90s, so it was fine. But in any event, if granny vacated and I now wanted to lease that unit out because it was attached to a pre-1978 structure, we would have to get someone in there to ensure that it was lead safe prior to releasing it to someone else for monetary or non-familial benefit. So that is one thing that we just like to put out there as a general PSA at New Hampshire Housing about lead safety and any new units that would be created within or attached to any pre-1978 structure. So we can probably hit the next slide there. And now we get to cost considerations. So we've thought through all the pre-development pieces. We've gone to the planning board. We've gone to the ZBA if we had to. We have the site kind of laid out. We've got the architectural done. We know that we're ready to kind of move forward on this project. Now's the time to start thinking about how much is that actually going to cost. Construction costs are typically higher than you would expect, especially if you haven't been part of a construction project within the last 5 years. At New Hampshire Housing, we're seeing construction costs anywhere between $250 and $500 a square foot. $500 a square foot is really, really high. We typically see that in around the Seacoast region predominantly, but definitely things to be keeping in mind when it comes to any addition to a new home. And what that means for an ADU, like if you consider 780 square feet per unit, we'll take them kind of the mid-range there of 350 square feet a unit. That's a $273,000 investment in the house that is being made. That is a lot of money for any kind of new construction. So definitely something to kind of be mindful of and considerate of for anyone who's kind of considering an ADU. And again, I'm eager to hear from a few of our panelists today to see if there's any room for cost savings, or maybe modular construction might be able to bring those down. But I'm quoting solely from kind of stick built, both homeowner and multifamily development. And then the other thing to consider if you're building much of anything, and the bankers will probably appreciate this and might opine with higher or possibly lower figures on this front, is factoring in a construction contingency. So when you're planning kind of before you go to the bank, as you're considering costs of all these things, it's always safe to add 10% to the cost of construction or more, just because things happen when things are being built, or just in general. So if we look at kind of the example above, we'll say that, the base cost of construction at $350 a square foot is $273,000. If we're going to kind of cut the middle and take an 8% contingency on that front, that's an extra $22,000 that has to be accounted for, which would bring the effective construction cost of this 780 square foot unit to $295,000. So definitely something to consider. And again, this is a major reason as to why we have partnered with banks to figure out how we can finance these things and move forward on that front in a way that protects both the asset, the construction, the home, and serves the eventual resident of the unit. So we can probably go to the next slide there. Cost considerations in and around post-construction. Some good things to just keep in mind. Like any real estate investment, there's a whole bunch of long-term costs that are associated with owning anything. Taxes, your taxes, if you have an extra unit on your property, will probably increase your property value. You'll probably pay more in taxes. Insurance, if you're leasing to anyone who is outside of your household, the insurance costs will likely also increase. And then it's always good to factor in maintenance and upkeep for any investment property or any home as well. So just make sure that anyone who's considering this option is setting funds aside as time goes along for the eventual repair and replacement of things like the roof, the water heater, and appliances and things along those lines.
Ryan, I'll have to get you an updated photo of that. There's a beautiful wildflower garden in front of that ADU. And
Is that your ADU?
That's my ADU. That was one. I think that was our fifth
amazing.
one. Our fifth one ever built in Northampton. That barn in the back is now another dwelling unit too.
Oh, that's incredible.
Yeah, it's beautiful. There's a beautiful wildflower garden around it. It blooms with black-eyed Susans in August.
Oh, that's great. Yes. Please resend that to me. Yeah, I took this. I clearly stole it from your website. So thank you for that. And now I think we can get into kind of the financing solutions and segue into kind of part 2 of this overall presentation. But I'll take a minute to touch base on, so before I was a planner, before I worked at New Hampshire Housing, I was a banker for the better part of 15 years. I did everything from kind of retail lending to mortgage lending to commercial and whatever else I did there. It doesn't matter. In any event, when it comes to traditional financing solutions for home improvement, typically, if you're building an additional unit on your home and it's your primary residence, you have 2 options. There's a couple options in any event. But if you're looking at like conventional mortgage products, so think like your 30, 40, I've heard tale told of 50-year mortgages these days. you're looking at either a cash out refinance or a construction loan refinance. Cash out refinance, it replaces your existing primary mortgage. The loan amount is going to be based on the home's current value. I guess in terms of kind of the interest rates that are available for other products, the cash out refis typically have a more favorable interest rate and term on that front. That said, replacing an existing primary mortgage is a pretty tall lift for a lot of households these days. Again, I'll use myself as an example. We bought our house in 2009, which was a great time to buy a house. And then we refied, and that rate is in and around the low threes. So if I'm looking at a cash out refinance as an option, it would probably work. I have to increase my balance. My rate would most certainly increase by 2 or 3%. Is that the best option for me? I'm not sure. Maybe. Another option, if I don't have the equity kind of built up in my house, maybe I didn't buy it in 2009. I have it a little more recently. A construction type mortgage, it's a little different in that it uses the as complete value, so the future value of the home with the additional unit. That's great. Can help overcome some loan to value considerations that you would face with like a cash out refinance option. The issue there again is those rates are usually higher than you would find in a cash out refinance option. And again, you're replacing the existing primary mortgage. So if I've got a 3% loan and I'm replacing it with a 5 or 6% loan, how advantageous is that to me? Are the interest savings worth it? I'm not sure. So that's kind of the status quo as things kind of stand. And then we can, if we hit the next slide, we can go into some other second mortgage type options as far as some other opportunities that currently exist or have historically existed for these kinds of scenarios. And that would be kind of along the home equity line. So second lien mortgage comes in behind the mortgage. In a case like this, home equities usually have a loan or a line option. So in the case of a loan, it would be a subordinate lien position, so it would come in behind your first mortgage. Wouldn't impact that kind of push rate if you've got one, if you refied at the right time or bought at the right time. Preserves that primary mortgage, that principal payment. But the thing is with the loans in the lines is that they are based on the home's current value again. So when we say that, you're thinking about kind of the home as it stands today. How much equity do I have available to leverage? And that can be kind of limiting, especially if you're looking at adding $200,000 or $300,000 of value to the home that just doesn't get considered in that loan to value calculation. What's nice about home equity loans is that they're fixed rate, fixed term, fixed payment typically, but again, limited by how much available equity you have in the home as it stands today. The other piece of that, HELOCs, home equity lines of credit, same story, subordinate lien position, preserves that primary mortgage based on the home's current value, no consideration for the future value of an additional unit. And that rate tends to be variable based on the amount that is drawn for either construction or for any kind of use. What's nice about HELOCs is that they can be used for a variety of things. I've seen people use them to send their kids to college or refinance credit card debt or build an ADU. It kind of runs the gamut. But again, subject to some limitations, specifically around that loan to value calculation and basing the maximum loan amount on the value of the home before it's improved. So now we can probably scroll to the next piece, which is very exciting. And I don't want to spend too much time on this because we have a panel of wonderful people who can talk about exactly what they offer in the Southwestern region. But new solutions. So home improvement financing. This is something we had piloted in and around the Dover area when I worked there. And it really kind of takes the features of both options so that features of the construction refinance, specifically around the utilization of the future value of the home, coupled with the perks of that home equity loan or home equity line, and having that subordinate lien position and not having to refinance your 3-4% rate that you might have on the home that you currently own. So some primary features that we always like to point out on these: subordinate lien position, preserved your first mortgage, no worries there. Loan amounts are based on the completed value of the home, so you do get to kind of take into account how that additional value plays into the value in determining how much you can borrow. Oftentimes, these can be utilized for renovation of a home. Doesn't have to be to add a unit, can be for the addition of new units, kind of all across the board. The rates do tend to be a little higher than a home equity loan because they're riskier loans. And other pieces just to kind of highlight are that, as with construction loans, and I apologize for not mentioning this before, but anytime you're doing construction, the bank's going to want to know that things are happening on the schedule that they're supposed to be happening. So there's usually some construction monitoring, some additional costs there. Those typically get tied into these products as well, just so that folks know that something that has been pledged to be built is in fact being built and is built. And with a couple institutions, and I don't know if that's the case for anyone on this call, I have seen that potential rental income from those units, if they're not used for familial purposes, have been considered in the overall income calculation to help borrowers qualify. So if we go to the next one, I can show you kind of the first adopters of this process, but this will mean very little to anyone on this call, I assume, because we're going to hear from them shortly. And that's great. But first adopter, at least for us in the Seacoast region, was Lighthouse Credit Union, followed by First Seacoast Bank, Kennebunk Savings, Bangor Savings, and Service Credit Union. Clearly, with more banks and credit unions to follow. And I'll do a quick takeaway slide before I switch it over to that here. So key takeaways is the final cost of building an ADU is highly variable. It depends on where you live. It depends on the location on your property. It depends on whether it's going to be attached or detached or kind of how that is going to function. You definitely, if you're working with a bank or even if you're self-financing this, want to factor in a contingency so you make sure you don't run out of money mid-construction. Always anticipate that any improvement to a home for any reason is going to increase your taxes and insurance liabilities. So make sure that you're factoring those pieces in, and then making sure that you're talking to your bank about which financing option is best for you in your situation. So we went through a couple options as far as kind of the more conventional pieces, some of the more novel pieces. We're going to hear from folks about these pieces. But just because a product exists doesn't mean that that's the right product for you in your situation. So trust your banker, trust your credit union, talk to the folks about what would work for you in your situation, and get cracking from there. So we can go to the next slide. I think it's just my contact information in case people wanted to jot that down. But I don't want to capitalize on this conversation because I'm actually most excited to hear from the next folks, if that's okay.
Thank you so much, Ryan. That was a great overview and introduction for us. Next, we're going into our super fast mini guest presentations from our guest speakers, and so we are going to start with, I believe, Savings Bank of Walpole is up first. Here they are.
Thank you, Chloe. So as this flyer says, right, the ADU is you have unlimited potential and you're right in your backyard or next door or however you want to place it on your property. But the main points here, as Ryan alluded to, it is a self-contained living space. It has its own kitchen, its own bathroom, its sleeping and living quarters. And there's many different options out there. that you could do it, such as an attached or a detached, or renovating a barn, or it could be renovating your attic or possibly your basement. There's just many options out there. But I do want to really elaborate on is what Ryan mentioned is you really need to work with your town and or city, find out what the requirements are that they would like. Even though the state has opened things up and unrestricted a lot of the restrictions that were in place, but it is wise to work with them and make sure you understand what the requirements are. And then the next steps would honestly definitely be working with a contractor, understanding what the costs are. As Ryan alluded to, they're not inexpensive. They might be. There's many different options out there, but it depends what you're looking for. And you're going to need to understand the contracts, working with a builder, and really understand what their requirements are. And then at that point, you want to work with a bank or a local institution that you are comfortable with. And many banks have very similar products for financing. As Ryan alluded to, you can refinance your existing mortgage. It may be beneficial, it might not. Would look at the rate. You could possibly do a home equity line of credit, as he discussed. That rate is not a fixed rate. It's a variable rate. It's also a product that you could look at as a home equity loan. That is a fixed rate that we could look at. But there is a new product that Savings Bank of Walpole is offering, and that is a ADU construction loan product. And that is a term of up to 30 years. Does not have to be 30 years, but it can be. And it is a second lien loan, meaning if you have your first mortgage in place at that nice, attractive 2.99 interest rate you received 5 years ago, we will do a new construction second lien without touching it. It's a construction loan, whereas most institutions will not look at a construction loan. They're going to want to refinance because the collateral, the property, may not end up being finished. So we look at it as we would look at a second loan, leaving your first in place. Your second lien loan, construction loan, would be a fixed interest rate, and it would utilize the new value of your ADU. And that ADU, we would look at an appraisal, looking at your existing value of your home and looking at the new financing. It is a single loan closing, meaning it's a single loan construction close. You're done, you go sign, everything's all nice and packaged up, and then we hand it over to an in-house construction team. And this is where I'm going to hand it over to Roy, who is our senior lead construction specialist, and their team actually takes it from the closing and works one-on-one with the builders and the customers to protect you and the contractor and the bank. Roy.
Well, thank you, Christine. I actually want to piggyback off of both what you said and Ryan. I'm going to edit one thing. Absolutely start with the municipality, make sure it's allowed. I would say before you talk to the contractor, talk to your banker, talk to the person who's going to be financing it, and see what you can finance. What Ryan was referencing is absolutely what we're seeing across the state, especially for ADUs when they do have those kitchenettes and those bathrooms. It is not surprising to see square footage over $300 a square foot, just simply from the fixtures that go in there. To add to what Christine did say, yes, this new product is excellent in that you get to keep that first mortgage. It is on a 30-year amortization. The one other caveat, like with our other construction loans, is that you have a 12-month interest-only period while you're building. So there is a lot of nuances in here to be able to have your cake and eat it too. It is an absolute excellent product because it does take a look at what the current value is, plus those improvements that you're putting into it. Some points that I would point out to it, what we've seen for ADUs going in have been really on new construction more than anything else. These are people who have built in the last 5 years and sort of had that additional space already planned out. whether it be with a walkout in a basement or unfinished space over a garage. It was things that was already planned. Similarly, I think Ryan was referencing some modulars. We are seeing also modulars that are being delivered with incomplete finished space inside of them. So whether that's a second floor and a cape or some other back spots that have the rough plumbing and electrical in them, it's not a complete finished spot. And so you can do that on-site build out after. We are absolutely geared up for full construction and for ADU construction. And one thing that sets SBW apart and all three banks in the NHMB community is that we can work both with your general contractor on this, but we'll also allow you to be a self-general contractor if you have some knowledge in the industry or if you can provide some acknowledgement in managing projects. So this is a great advantage for us as, Yankees up here in New Hampshire to be able to roll up our sleeves and put into some sweat equity into our own projects. And we've done that in several different circumstances. As an example, we have seen a few different types of unique projects, whether it is something that's coming right on site, already built, some kit structures. We've even seen some that are more like an agrarian, barn dominium type of thing. The one other caveat for our ADU product, and this was important for SBW when it came in, is that we do want to make sure that it is, in fact, adding a building unit. So I believe it was RJ who was mentioning some of his build outs don't currently have those kitchenettes. For it to qualify for what we're looking at here, we would look for an independent kitchen or kitchenette in there.
Yep, exactly. And to piggyback off of Roy, to proceed with an application, you would need to submit an application. We would be looking at your income, your assets, your credit. So we would look at all that information as W-2 statements, bank statements, your recent pay stubs, and then in addition, we would be looking at the construction loan documents. So it is an added layer of documents, which the bank would provide to you, a lot of these spreadsheets to help you plan. And then you would need to definitely have your project approvals in place, such as your subdivision plans, your septic plans, a driveway, building permit, all those fun documents that we all need when you're building. And I know all the contractors are all too well familiar with that documents. We do require a contingency, as Ryan did explain about. There is a 5% contingency if you're working with a general contractor. We do allow self-GC. You're going to need, there's more requirements, and the contingency is a 10% contingency. So these are all things a loan officer would work with you on, as well as a construction loan team. And I think that, Roy, do you have anything more to add to it? I think we're probably up on 5 minutes. Exactly.
Yeah, no, I think that was great. Thank you, Christine.
Thank you both so much. That was a great overview. So many details. All right, up next we have Mascoma Bank. Kathy, it is all you.
Great, thank you. So Savings Bank of Walpole, as well as Ryan, pretty much, have said what we can and can't do, which it did, as they said, we all kind of jumped through the same hoops, trying to come up with a solution for the housing crisis. Very similar. We also have a new ADU loan program. It's so important, though. Every situation is so different that you do need to sit with someone and go over what you currently have for a mortgage, or do you even have a mortgage, what you're trying to accomplish, because finding the right program is super important. So although we're talking about ADUs and we do have a program for ADUs, they are second mortgages, as everyone spoke about. The one thing that we're bending on or trying to make accommodations for, hoping that it will be helpful, is we're offering, as construction loans, we're going 90% loan to value, no MI. We are hoping that helps in some ways. Another thing that Ryan spoke about in one of his slides is, some banks will allow for a projection of rental income. We'll also consider that. So if it's that it's being built, for the purpose of rental, we can consider a lease to help qualify for the mortgage. So the kind of the bottom line here is the best advice I can give is meet with a lender to find out what your current situation is, where you stand, not only loan to value, but what you're trying to accomplish, meaning do you know how much you need, and also what that projected income, or I'm sorry, that projected value will be, because that's what we would take into consideration as well. Another point that I wanted to share, we all spoke about having some contingencies or having some funds available. I just can't speak enough to, and you can tell we're all talking about it, the best of them with construction loans. There are a lot of cost overruns, things that you don't anticipate. And just thinking about when you're talking about an ADU with an existing home, you don't know what you could possibly be breaking into, meaning into that home that might need some attention before you can get your project done. So just keep that in mind. And also we build that in. But the takeaway would be, or my suggestion would be, each situation is unique. Each town is unique. Zoning is different for each town. And what is allowed is different. So sit down and kind of go over with your lender what you have available, whoever that should be, Mascoma Bank or any other local bank that's willing to do that, and get a game plan for that, and then figure out what your town allows. Mascoma Bank is offering this in New Hampshire, Vermont, and Maine, the 3 states that we lend in. So give a call. We can go over your particulars and see what we can do.
Thank you so much, Kathy.
You're welcome.
So those are our 2 lending institutions. So now we are going to roll into builders. And up next we have backyard ADUs. So Chris, all you.
Yep. Hey, good evening, everyone. I did not do any slides, but I will kind of talk through what we do and what we'll be doing next year. So I said in my brief intro, we're a full stack modular builder. And we cut our teeth figuring out how to permit ADUs before they were in vogue in New England. Fighting with ZBAs and trying to explain to towns why they should just let it happen. And kind of in that process, we had the realization early that the only way that we could possibly help lots and lots of people build ADUs was by figuring out everything. Because especially in Massachusetts and even in New Hampshire and Maine, and the towns that are getting bougie, like Dover, Ryan, and Portsmouth and the Seacoast. I don't know if it's made it to Keene yet. I think the CEO up there is a pretty good guy and very down to earth. But yeah, we focus on doing a very heavy pre-development exercise from a very initial feasibility study, answering the questions of, can you get water and sewer there, and is that going to blow up your budget? Without asking the homeowner to pay a lot of money up front. We do that kind of like a home inspection for $600. And the goal is to help a homeowner stop their process immediately, and also to kind of help us not bring somebody into an ADU process and spend more money if we're not going to get to build the ADU. Because ultimately we've got limited resources and we like to build ADUs, not just design them. So we do a lot of that pre-development. We focus on the site aspects, getting that right. We do the design work of the ADUs. We do the engineering of the ADUs, foundation, as well as the structure in partnership with the modular factories. We take care of all of the permitting, and kind of in that envelope, as we're doing all of that, we're also pricing the ADU. And the entire goal of that initial process with us is getting to a fixed construction contract and getting there for as cheap as possible, so that the homeowner still has a chance to stop the process before they are in the situation that a lot of people have described on this call, building, tearing through a contingency, being asked for another 10%, but the average ADU, 273,000, you can't just find an extra 10%. I assume most people listening don't just have an extra 30 grand in their bank accounts to give to a GC who didn't spec the septic right or something. So we're very heavy on the planning. And we do that right now only for detached ADUs for the most part. We will attach ADUs, but we have not gotten into basement renovations or attic renovations, quite frankly, because it's too difficult to systematize. In New England, our houses are really old, and the new codes and everything are so far beyond what's on this street. We've found it a very difficult process to get someone to a point where it could be a fixed price construction contract for an ADU in a situation like that. That said, those projects tend to be the cheapest way to build an ADU if you're lucky and you have a good situation, and also can be the way that you can get the most DIY bang for your buck. It's very hard to do a DIY new detached ADU. And we attempted to do that a little bit with, I think it was you, Roy, mentioned modulars that show up partly finished, ready with stuff. We tried that for a while, but ended up having lots of bad customer experiences, not fully understanding what they were getting and what the scope was going to be. We've torn down a lot of garages. We've never converted a garage. Unfortunately, most of them are not on frost protected foundations and don't have footings. They were all built in the 80s and we're taking advantage of codes where you can just build on a 4-inch slab for structures under 400 square feet. So we end up tearing them down and kind of rebuilding, which does not end up being a cheap project. It ends up being kind of a vanity project for someone that has a non-conforming garage where that footprint is really valuable. And that probably wouldn't apply to a lot of locations in Keene or up in that northern area, but it very well might in Manchester, where there's a lot of those garages sitting right on property lines. So in terms of where we build, we're all over Massachusetts. Right now, Massachusetts is kind of the mecca of ADUs. They have the best legislation to date. They've kind of dropped the ropes on everything. They don't have the best permitting. I think New Hampshire and Maine, it's still easier to permit projects in general, even though it's easier from a zoning standpoint in Massachusetts. But I mentioned the bougie towns. A lot of them are catching up with all of the requirements that can be thought of by a municipality in order to protect anything from spotted box turtles or trees or wetlands or people's safety on sidewalks, whatever it might be. And that all still applies to ADUs and can make permitting a challenge. We're building in Maine. We're as far north right now as Augusta for ADUs. And we're doing some multifamily projects in Rangeley and Bangor, funded by Maine Housing, their rural rental program and their affordable ownership program. So we're looking forward to that. And then we have two ADUs going on in New Hampshire right now. One in we just finished one in Barrington. We're in Hampstead and going to be doing one up in Ossipee. So we're starting to get in there. And I think those are all in response to the new state law, which overturned a lot of the things that happened in the first attempt back in 2019, and kind of was another marketing event that ADUs are ready. And really they had been a lot of the towns, just awareness. Yeah, that's backyard ADUs. We're building ADUs and we're doing it modularly. And our key things are do all the planning up front, lock the price in, and then guarantee a timeline for move-in. Kind of the three things that typically don't happen in construction, but really should, especially if your 78-year-old mom is waiting to move in. So I'll hand it back. Thank you.
Great, thank you so much, Chris. All right, our last guest presenter is Wheelpad. So here you go, RJ.
Hey folks, thanks so much for taking the time to come tonight and learn about ADUs. I'm going to show you a little bit about Wheelpad, why we do what we do, and what our products are. So right here, you're seeing a free range suite pad view. Can you go to the next slide, please? Wheelpad is dedicated to offering people the choice to stay in their home through a change in mobility or caregiving needs. Our universally accessible design and craftsmanship go far beyond the building code to enhance the home they love. Next. So all of what we build is universally accessible, right? Our target market for our bedroom and bathroom products and our bedroom, bathroom, kitchen products are folks that needed accessibility on site yesterday. And what I would love to instill in the projects that people are thinking about tonight is, even if you're not using a product like wheel pads, you should really consider future accessibility in that ADU that you're building, because we all have periods every day of our lives where we have situational disabilities or temporary disabilities, right? I don't mean to pick on Chris, but he and I both have had children, you know, in the last 3 to 5 years, which means we've been caregivers. I don't know what his house looks like. I know mine's a 200-year-old Vermont farmhouse, and it's not terribly accessible. So, you know, caring for my children, caring for my wife while she was pregnant, you know, postpartum as well, it's difficult if you're in that situational disability of being a caregiver. You know, I walk into my house most days with one arm because one arm is carrying a 14-month-old child. So you might have a permanent disability, right? And therefore you need accessibility. Or you might find yourself in a temporary situation where you're recovering from a surgery or something like that. Or you might be in some situational situation, as it were, where you accessibility would be easier. So easier is easier no matter if you need it all the time or not. You can move to the next slide. So this is what we can do here at Wheelpad. The top left-hand picture, you're seeing our CEO, Julie Lineberger, standing in front of the suite pad attached to a house. It's actually the same suite pad that you saw in an earlier photo. Suite pad is a bedroom and bathroom. And again, it's made to attach to a house if there's a sudden need for some kind of accessibility on site, right? Our customers tend to be folks that are getting out of Spalding Rehab Center in Boston with spinal cord injury, or going to, you know, facing a diagnosis of ALS, or, you know, facing needing to bring their parent home for whatever reason because they can't live independently anymore. We've done one of our Suite Pad XLs, which is pictured on the top right-hand side there. That's a 12-foot wide model. And that is, you know, still available with a slightly longer timeline. It's slightly more customized. Later in about 2 months, I'm hoping to update that picture on the bottom right-hand side of our studio pad. That's going to have a kitchen in it as well. So technically would be an ADU and therefore available for much of the financing that our friends at Mascoma and the credit union offered earlier. And then on the bottom left-hand side, you're seeing a project we did called Multi-Pad, where we actually took 3 of our suite pads and built them together to build a multifamily housing unit for a school in New Hampshire. So, you know, really there's a number of things you can do with our products. So next slide, please. This is the inside of a suite pad. All of the stuff you're seeing belongs to the family. This is installed in Burlington, Vermont. All of the space kind of comes finished, ready to go, ready to move in. If you can imagine somebody facing needing to move their parent in really quickly, right? They might not be concerned with, oh, I want the trim to be this color or that color. They just need something that works. So we offer our products for lease. We also offer to repurchase our products if there's some kind of temporary need, but you don't know what temporary means. And then when they're attached to a home, it looks as though you have always had it there, right? Or it's meant to be there. So next slide, please. This shows the other end of that unit. Great big windows let in a lot of natural light. This family, you can see, decided to connect through the sliding glass door. Some families decide to connect through the swing door on the opposite side. Next slide. This is a picture of our bathroom. It's a full open wet room. It's plenty of space for an aide, or if somebody requires washing assistance. Next slide. It just gives you another view of both doors and some more of the accessibility features on the inside. There's things like the track on the ceiling you saw, which is helpful if you're trying to move somebody back and forth that has lower body paralysis. That's a very present feature, right? Our open bathroom is a very loud accessibility feature, but there's some more quiet features like the scalloping on the walls, which is actually just made out of a plywood, because people that are new to using wheelchairs will often bang up the walls, and it's much easier to just put in a new piece of plywood than it is to install a new drywall or something like that. And all of these are features that I would love for you to steal and put into one of Chris's houses or something like that, or put into your own design for an accessory dwelling unit. If you're building for this population, right? One company is never going to solve the housing crisis, and one company is never going to solve the accessible housing crisis. Which, I mean, with spinal cord injuries alone, it's 17,500 people a year that find themselves in this situation, and less than 7% of houses in the New England area are deemed minimally accessible. Next slide. This you can see is installation that we did in Brattleboro, Vermont. It's the interior and the exterior of a connector. On the interior, you can see it flows right into the house. So this was leased by a family whose father had a kidney disease, and he had been given 6 months to live, and he was given and he lived for another 2.5 years. I don't want to say it was because of our product, but he had, when his son called us to say they were ready to end their lease, he said, "This has just been the best effing 2 years of my life with my dad. So thank you so much." You can go to the next slide. This shows the timeline that we are able to install in. And I'm excited to say that we've done this more than once. I'm not going to read through each of these bullet points, but what it shows is from March 16th was that original call, all the way through to April 4th was the start of the weekend where we started the delivery and the connection. And so it's less than a month, right? When you're building for this population, even the most stringent towns, we've been able to get a variance or bend the rules because they understand that we're not building some vanity project. We're not building a backyard Airbnb. This is medical necessity for a family. So I really feel that these kind of projects are on the bleeding edge for the accessibility or for the ADU infill development that's going to lead to other projects again in the future. So next slide. This is our pricing, right? This is the cost of our products delivered to you. As I said, we offer both lease and purchase for Studio Pad and Suite Pad. XL Pad, Multi-Pad, those are customized projects. So, those are a little bit less sure in their costs. But we're able to deliver anywhere in the lower 48 at these places. And then installation is on top of that. So I believe I'm close to my 5 minutes, if not at it. So thank you all so much for taking the time to learn more.
Thank you so much, RJ. So So that is all for our presentations. Thank you all very much. Now we're going to go into our panel session, and I'm going to hand it back to Ryan. Take it away.
Thanks, Chloe. So we had a few questions kind of prepared ahead of time, but I definitely want to make space for some of the questions that were submitted ahead of time and any that folks might have to put in the chat. So feel free to post things in there. We'll get to them soon. But I guess I'll start by going back to my banker friends because we haven't heard from you in the longest at this point. And I'm wondering if you guys can speak to how homeowners should decide which product is best for them in their specific situation. So I don't know if you all want to speak from experience on that front, but I think we can start with Kathy and then head over to our Bancorp folks.
So the question is, how do you determine which is the best product for your customer? So we've talked about interest rates, and we've just come from this historic low interest rate environment where now anything in a 6 just sounds insane, which is not really the case, but it's hard to convince somebody who has a 3 or 4 that, hey, sorry, you got to let go of that. But that is a big factor when we're talking about things like, adding on or a project. So really, that's where you've got to get a baseline of where are you now? How much do you owe? What is your current interest rate? What is your term? And then what are you trying to accomplish? So it's very individual, very specific to each person's needs and what they're trying to accomplish. So having a consultative kind of approach to where do I start? It's the same as if you were going to think you were going to buy a house. If you own a home, well, you got to know what you own first. How much money do I have down? Well, what's it worth and what do you owe and what is the net of that? So that would be my suggestion.
I actually agree, Kathy, with what you're saying there. It really is very case by case sensitive. The one other big nuance is something that we touched on, which is, have you owned your property for a long time and do you have ample equity? Because if you can do a line of credit, I think you're going to find the interest rate is very similar. And while we can help guide you through the process, we are not project managers. So that line of credit,
Right.
we're going to hand you a checkbook and say, good luck. You can go do what you need to do. Whereas if you do go with the ADU product or even a more traditional construction loan, we're going to hold your hand through it. And it's not because we want to see you suffer and struggle through it, but it's because we want to make sure that it's very, very easy to deviate off the path during construction. We need to make sure that we are completing the scope of work that is supposed to be there. So for most people, I hate to say it, just from a cost standpoint, I don't think that HELOC is going to be an option. But if you can get that shot at the apple, take it. I think the next best one is preserve your first mortgage. So you're looking at that ADU option. But if you're stuck and you do have to lose that first interest rate, I will also share that there's definitely options to refinance with us internally after the construction phase is completed. So there's definitely opportunities in talking with your financial professional. It's not a one-time thing. It really is an evolution over time.
Yep, I absolutely concur with both of you on those statements. It really takes you sitting down with your loan officer, and really that's where the loan officer is asking all your information questions, is learning about what products that would possibly fit for what your assets are. If you own the home, how much equity do you have in the home? Maybe, if you have a great first mortgage rate, now you're adding a second loan, construction loan, you're going to look at a combined interest rate of how much interest you're paying. They're going to sit with you and kind of do an analysis to see, is it really better to just refinance? Maybe, or let's look at the scope of your project. Is this a much bigger project? And maybe it's a construction loan, a true full construction loan. So the key point is sitting down with a loan officer and really talking about all your assets, where you are and what your wants are and needs are, as RJ said. Their needs are very important. Want and needs, there might be some health reasons that you need to do something. So
Thank you
Did we
all.
lose Ryan? Oh, there he is.
Oh, no.
I lost you. I was like, he left my screen.
No, I know. I couldn't unmute myself. I was having a trouble with my mouse. But now we can go to, I think, Chris and RJ. I'm curious to see, these products are obviously a little new as far as ADU specific financing. I'm curious to see how your clients have historically financed these things, or how that's worked for you guys.
Yeah, the vast majority, probably 4 out of 5 people are paying cash, and that's been a function of prices getting run up, interest rates being high. It's just created more well-heeled customers kind of building these things after they've sold their house that's paid off somewhere else. But recently, we have started to see an uptick in financing. So we've done a handful of ADU loans with Bangor Savings. We've done a handful with Cape and Coast, which is a Cape Cod bank. We haven't done one with a New Hampshire bank yet, and we're doing one with Kennebunk Savings. So it's starting to happen, I think, and we've seen people use those loans to finance a portion, but we've also now seen adult children selling a house and taking out an ADU mortgage to build an ADU in their parents' backyard. And we kind of think that that's going to be a huge growth area for ADUs next year as people realize that high house prices are not going away and that we're not going to go back to 3.5% interest rates. And that it's starting to click that 273, it's a lot of money. Even 400 is a lot of money. But for a brand new energy efficient house, it's not really that much money compared to how much everything costs these days. Um, the other way that people are doing this, a lot of customers kind of trying to figure out how to bridge finance. So downsizing parents moving into kids' backyards, they're usually trying to use proceeds from the sale of a house to some extent. So they need to bridge 100 to 150,000. So they'll be talking to a loan officer trying to figure out, okay, how much equity do I have? And just trying to get the absolute cheapest money as possible. And they usually end up in some kind of home equity line of credit product that doesn't have a payment term or need a full appraisal. And then the other way, there are some programs in Massachusetts, some state subsidized programs that provide some basically deferred payment, zero interest options for people over the age of 55. And there's more of those coming. I haven't heard any notes on anything in New Hampshire yet, but there's some talk in the Maine legislature, and Mass Housing is actually going to be sponsoring a program. The word on the street is that they're going to be hopefully buying back loans from commercial banks and create a secondary market for ADU loans, which I'm very excited about because that's what made the mortgage market take off. So come on, Mass Housing, right? Or New Hampshire Housing, Ryan. You can put a word in. I don't know. Finance ADUs instead of multifamily projects.
See if you can give me some of that mass money. That'd be great.
Yeah. I know exactly. Mass, deep pockets from taxing Boston and Concord, right?
I saw Jackie asking a question about, give me some more information about those loans from Massachusetts over 55. So Jackie, there's a loan in Massachusetts called the Home Modification Loan Program, where if you have a disability, and it's a broad brush as to what that means, you can get $50,000 at a 0% interest loan that is only payable upon sale of the house or transfer of the real estate, for making that house accessible. And I believe, Chris, you said you've used this for an ADU.
Yeah, we've used six or 10 ADUs. It's been a huge win for people on the edge that need that extra 50 grand.
Yeah. So that's, it's essentially a way to sort of get at your equity without getting it, and then just screwing over your kids. I'm kidding. Sorry, it's late. I get to make jokes. Our products are, there's some other loans. There's one in Maine. It's called the
adaptive equipment loan program for people with disabilities that need to fund the assistive tech that they need. Similar to the one in Massachusetts, it's $100,000 at 3.75% for 15 years. That's cheap cash compared to what you're able to get. I see all the bankers nodding, right? That's available for if you needed a car modification or a home modification. It does cover something like our product. Chris, I don't know what you would have to do to, build out a detached ADU to get that covered. But I would love to make that introduction because I want, the more tools that are in the quiver, financing tools, building tools, that kind of thing are important. I was talking to a builder once who unfortunately has passed away. And he said, you know how much more it costs to put in a 36-inch door instead of a 32-inch door? $4. $4 is worth it. Right. So if anybody needs $4 for their door, I'll do it for them. Brian, you said a friend in Vermont built $50,000 grant from the county. Is that something?
He built an ADU, but got a $50,000 grant from the county.
Yeah, so that's called the Vermont Housing Improvement Program. So I'm not quite sure if that exists in New Hampshire. That requires you to work with one of the home ownership centers. There's 5 of them in our state in Vermont, to lease to a person that's below 80% AMI. For a developer that was putting up a larger building, they can also get that grant, but they have a few more stringent strings on those dollars. Like it has to be somebody exiting homelessness. But for Vermonters, it's for just backyard developers, it's a little less stringent, and you'd have to do that for 5 years. Ryan, do you know if there's anything like that grant available in New Hampshire?
Not that I'm aware of. We are constrained by our tax structure in New Hampshire. So I can share that historically as New Hampshire Housing, receives the Affordable Housing Fund that we leverage for a variety of projects. And our funding has been reset to its statutory minimum for the current biennium beginning this year. So what had historically been about $15 million in subsidy and equity financing is now 5. So call your friends if they're legislators. What's nice about New Hampshire is that everyone's neighbor is also a legislator or knows one. So if these things that are happening in Maine and Vermont and Massachusetts appeal to you, let folks know. And on that note, I think we can hop back to the bankers, because there's a couple different kind of construction methods that we saw here. But be it modular, it looked like some of the things that were shared, the photos were buildings on wheels. So I'd be curious to hear from the bankers as far as construction type. Like, are there things that make it easier to finance as a bank, be they stick built, be they modular, along those lines, just for the audience?
I can speak to that. It needs to be attached permanently to the structure. Sorry, Kathy, if I spoke over you there. I noticed a few on trailers. They are beautiful. I've got a brother-in-law who's a little bohemian and I think would love one of those. It's tough. They don't have titles on them. They're not vehicle loans, but they're also not part of the collateral in that they're not fixed to the real estate. So certainly with our banks, they need to be permanently fixed to the real estate.
Yep.
Absolutely. Yeah. Yeah. I was like, ooh, if it has wheels and can move overnight, I'm sorry. It's lovely. But nope, it can't be part of collateral for construction financing or for residential lending.
Unless the homeowner does own the house, right? Let's say there's equity and they're going to refinance the primary home and there's enough equity. So again, talk to your loan officer and there may be other options. Take it, so
True,
because
it
I
worked
did.
with the
I
HELOC,
agreed.
so it's true.
HELOC, right? So there's options. We just need to sit with the borrower and understand what it is. And yes, that wheel pad, those were amazing. I'm writing it down for my family right now with some health issues.
And if they need to, the wheels can come off, or we can take them off the wheels, right? It's specific for if somebody's leasing it for a year while they're building an addition. That's, we have folks do that all the time. We dropped one off yesterday, actually, for a family who's wanted to get their dad home a year earlier because it takes a lot of time to make sure that you're spending the right amount of money, that you're, calling all the right professionals in. But again, some people don't have that time. So as I said, we're sort of an ADU adjacent product, which is why I tend to let speak first in this webinar. But it's I'm very used to bankers saying, "Oh no, thank you." Yeah.
And you're right with that timeline. I was looking in your presentation there, Jay, it took less than a month or just a month to get that unit in, where, construction for an ADU is a year or 18 months. It depends on the town, on the permitting, not the builder, the permitting. You've got some little towns in New Hampshire that you got to only meet once a week, maybe, if that. So maybe not an ADU. Unless you work with backyard ADUs, you're going to be done in 6 months. So, but it can take, it's a process is the main point. And I loved that wheel pad idea.
RJ, just a question or a comment regarding the structures. Do you run into any issues with towns as far as keeping them, if they are still on wheels, if they're allowed to sit on a property through the winter? I know my town they go crazy over that stuff.
Yeah, no, I mean, I think if you were using our product to, rake in a bunch of cash on Airbnb, yeah, they would say no. But we've developed variation on a frost protected shallow foundation that we provide with, for all of our customers, because you never know when you're going to get in a car accident, right? You never know when you're going to need to quickly install something. So, we've gone through the process enough with different towns. I've spoken with zoning administrators that have said, "Oh my God, Keith needs to go home. Let's deal with permits later." And I've also been in longer zoning conversations whereby, at the end of the second DRB meeting, they said, "But for the reasonable accommodation of the ADA, we would not grant this variance." Right. So that's why I said earlier that I think accessibility is really on the bleeding edge of allowing this type of development. It's really hard to say no to somebody in that situation, and nobody wants to say like DRB like denies old woman with ALS the ability to go home as the headline the next day.
Thank you all. And I know we are at like 4 minutes left, and Jackie was kind enough to repeat her question. And this one is for Chris. If you build mostly in Maine and Mass, would you have to charge higher costs to build in New Hampshire due to transportation issues, etc.?
Not necessarily with transportation issues. I mean, we have a system where we have a lot of traveling carpenters kind of modeled after the traveling nurse programs. So we're putting people up in hotels, and as long as it's not all the way up in the far reaches of northern New England, we're not really adding extensive travel or hotel fees or anything like that. The good news with modular is we're in and out pretty quick. We don't have a lot of visits to the site, and we're looking for local excavator, local electrician, local plumber, so that we're only sending our traveling carpenters for like 2 weeks. So, and travel issues, the cost of moving these boxes is not generally a leading driver of the cost of the boxes. So whether or not we're stopping in Concord, Massachusetts, or bringing them all the way up to Ossipee, New Hampshire, we're looking at like an incremental cost of like $500 to $1,000, which in the scope of the project is not going to be a real leader in decisions unless we're trying to hit a budget of like 230,000, which every single $100 increment counts. And I'll say we do have one of those in production right now, which is exciting. It's our cheapest ADU for a long time, and it's in at 236,000 in Auburn, Massachusetts. So we're excited for that in January.
That's awesome.
Yeah.
Well,
and it's
we're
not
done.
really, because it's still $236,000 for a
but
little
still.
ADU. Yeah, but still,
It's
yeah,
baby steps.
yeah.
Well, we're down to like 2 minutes left, so I'll turn it back over to Chloe to kind of wrap us up here. This has been a great conversation. I feel like we could have this forever. It was great getting to interact with all of you. Thank you so much for having me. And I'll duck out.
Thank you so much, everyone, for coming. I know I learned a lot from this conversation, and I agree with Ryan. I think we could go on for a very long time. The conversation was just really deep the whole time, and I appreciate the energy and the expertise and the questions that everyone brought to the session. Just a reminder, we will be posting this recording on our website, and I'm going to spread it around because I highly recommend that people would watch this, and you're welcome to also spread it around to your contacts as well. I think this could be a really great resource for people. I want to thank so much Ryan, Chris, Kathy, Roy, RJ, Christine, the whole team for coming together on this webinar. This has been in the works for a while, and it has turned out really great. So I just want to thank you all, and yeah, have a good night.
Good night, everyone.
Thank you all.
Thanks. Bye, folks.